Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of Tuesday, November 26, 2024. A day full of action. You know, yesterday, I admit, I got confused when I read the 25% tariffs on Mexico being projected by President-elect Trump and Canada. I would have thought, when I heard that, numbers were high. Number two, on Canada and Mexico, our biggest trading partners, those are big numbers. Then when I saw the 10% number on China, I thought maybe things got inverted. Normally you'd hit China with the bigger number and our trade partners with smaller ones. But this is part of the Trump plan, coming out swinging, telling people what he expects. He's got 4 years to do his deal. He's not going to waste time. You don't want to get on board, this is what's going to happen. Now understand, take a gun, pull the trigger and shoot it at yourself in the foot, because 3 of our largest auto manufacturers get really hurt if those tariffs go on. This adds probably about $3,000 a car. At least that's what I read today. And that makes them definitely a problem for the market. So you want to look at what's going on there. You heard that Israel and Lebanon have reached a ceasefire. It's not a treaty. It is a ceasefire for 60 days. There's a lot of particulars in it, but it's a good piece of news. That is not friendly, in my opinion, on the energy market. It takes away another potentially explosive element there. This allows Israel to now get its forces out of Lebanon, concentrate on doing away with whatever that means, by the way, with the influence of Hamas. I didn't say killing the people. With the influence, and how they get that done, I don't know. And maybe, just maybe, this opens the door to Hamas to realize they stand no chance now that that is resolved. It will take Iran to get involved, and as Netanyahu said, not me, they're now turning their attention also on Iran. So they're in a war mode. They've been depleting their reserves of military equipment and so on, ammunition. But guess who's in town? There's a new guy in town on January 20th that's ready to send them a lot of stuff. So that's where we're at with that. Not through. Wait till you see this. You think tomorrow's going to be an easy day, and it should be normally, because it's the day before people leave for the holiday. Their minds are already gone on trading. Come Monday, they'll be back. Even Friday will be not a day a lot of people do a lot of things. But you got the Mortgage Bankers Association numbers at 6. We have jobless claims, which will be important at 7:30. We get another look at the third quarter GDP. Advanced durable goods data comes out at 7:30. That's important. Chicago PMI is going to come out 8:45. Then the National Association of Realtors U.S. October pending home sales come out at 9. They were a disaster today if you looked at them as to what the numbers actually came out, and they were terrible, of new home sales. U.S. monthly personal income spending and the all-important PCE price index data, that comes out at 9 o'clock, and that's one of the Fed's favorite indicators. EIA petroleum stocks, they come out tomorrow at 9:30. I'm running out of breath here. And natural gas storage at 11. Now, we did get today the FOMC minutes. They came out at 1 o'clock in the afternoon Central Time. And it certainly looked to me like you've got a group of members that are saying they can afford to slow down the rate cuts. They still see a strong labor market. They still see a strong economy. Code words, why are we cutting? That could be where you're at after that. There's no way to know. We get the all-important PCE tomorrow. When we come back, we're going to get jobs data, 2 CPI numbers. Well, a CPI and a PPI, those 2 numbers. So there's still, this is going to be all over the board as to which way it goes. Got it? All right. So let's take a look at what the markets did and get a feel for this. In the stock market, the strength in the market today was certainly in the NASDAQ. Now, it's giving back a little bit of that tonight. Weakness showed up in the Russell, and weakness showed up in the Dow. So you're just flip-flopping a little bit from what you did. The gold market, it is time to move to the Fed gold. It is time for you to move to the March silver. they are not in bullish positions. They're still in bearish positions, and the talk of tariffs is not bullish either of those markets, all right? That takes production down and hurts the economy in many ways. On the energy market, seeing the peace deal between Israel and Lebanon, to me, takes some of the war premium reasons out of this market. It also tells OPEC, as far as I'm concerned, that as they do this virtual meeting, they're probably going to say that they still intend on giving price hikes next year, early in the year, but for the moment, they're going to sit pat. That's what I'm expecting is said as they wait to see what Trump in the first couple of months does about Iran, if anything, and how the situation in the Middle East goes. So I don't think there's anything for them to miss there. A number of the currencies have given us a bit of a rally, and bonds and notes, well, you'll see on the charts they've been holding. So when we look at the S&P, I'm thrilled because on a closing basis, you're just about now at all-time highs, and I was predicting this in my special report. You can see how the market has come up to challenge those highs, and that's what I'm looking at there. When we look at how the market trend is, it's bullish. Higher lows, higher highs again. The market held, as we talked here last week, held the challenge there, making its move to the upside, and now the target's that 6,100 level that we talked about. Now, what could set the market back, in my opinion, would be taking out the lows of today if we first take out the highs that we made. Now, the high that we made was 60.44. Tonight's high is 60.43 and a quarter. The market could afford to break through the lows here and hold that on the pattern and not get through there, and you'd be okay. However, the market changes its pattern a lot if it first takes that out, gets over 60.44 and then breaks down. I don't want to see that. You're overbought into a resistance point. So momentum getting spent. The market's up at new all-time highs. What's it going to do with it? That's the big question. When we look at the NASDAQ, higher lows, higher highs, the market battleground is crystal clear. It's the 18-day average of closes. To get the market up and away, I think you have to get up over the 21,081 level, and then you've got clear sailing till you get to this point in the market, which is roughly up approximately that 2100 level to the then you open the door to 21,482. I certainly don't expect that right now, but by the end of the year, it's very possible. The Dow is relentless on the upside. It just keeps moving away. This is a market that had one break back into what I call and teach you here, the line in the sand. The 18-day average of closes seems to hold the market, and it's a checkpoint in markets. It often is. You go from other highs and you'll stop there. More times than not, you'll do this. You'll fight a battle, but you don't always do that. When we look at the Russell, backing off, but give the Russell a lot of credit here. It is at a high. Now, remember, it took forever for this market to get to a high. The others, the question is higher highs, higher lows. Look at the two on year-over-year basis gains, and you get an impact what's there. But traders are viewing very favorably the Russell. Analyst after analyst seeming to want a rotation into them. I don't know. To me, the only way I want to rotate into them as a stock market analyst isn't anything to do with how they're going higher and lower. It's interest rates, because the companies that make up this generally are much more interest rate sensitive. And if interest rates kept climbing and get towards 5% in the 10-year, there's a real problem for these. These are the people that find it harder to get loans, can't afford generally as much to pay the money, and there's a lot of companies here that don't make money in that index. When we look at the 10-year note, you can see how the market's got the higher lows, higher highs. I like that. I like that it's over the 18-day average. I don't like that it's overbought. That, I think, keeps new money from wanting to jump on the market. In bed, it's different. Overbought, that's one of the things that I think you say throttle back. You're not quite that way in the 5-year, and you don't have the trend the same way. You have a lower and low, higher high, but both the 5 and the 10-year have resistance at the upper Bollinger Bands. When we come to the dollar index, concentrate on this. You cannot afford to keep that red line under 80. It's got to get back over it. If it stays like that tomorrow, the odds are before this market goes for the highs, it goes for the 18-day average wherever it's coming in. And the flip-flop is true in the euro. I know the market had an outside day down today. Phenomenal. But if it keeps that lost bearish embedded reading, which it's doing at this point, I mean, it's crystal clear here, let's see, you didn't lose the reading here. You lost it here Tuesday, today, and you're not getting it back. We haven't seen the dollar open yet. But when I look at all this, what I'm saying to you is pretty simple. If you can't gain that back now, immediately now, then the odds favor that you're going to get a short covering rally, ideally to where price and the 18-day average come together, and the flip-flop is true in the dollar. In the British pound, I remain in the bear camp. This is the market that's kept the bearish embedded reading. It is the market that didn't really go anywhere. So I think the market's going to continue to be held as a as a short. Be careful though if you take out 126.15. You have an outside day down. If you take that out, it's one of the rejections of the outside day, and it often leads that before price gets under today's low, if that were to happen, a run at the 18-day average often takes place. You lost the bullishness in the November micro, Bitcoin. So you've come off the 100,000 level back to approximately, the 91,515. So you've lost a lot of cash in that right now. It's still bullish. Let it work this off, see how the market holds the 18-day average, and then we can get other ideas. On the energy market, I see void of a trend. I see a higher high and lower low. That doesn't excite me. Then I look at the WTI. I have a lower low and a higher high on the chart. And as you can see, the market is paying pretty important attention to this 100-day average in green. Up here, it fought with the 200 and the Bollinger Band and failed. It's doing it right here. And I'm going to repeat, taking one of the market players out, Hezbollah, taking them out with a ceasefire deal is a good thing, which is not bullish on the energy markets. In fact, bearish on the energy markets are all these threats of tariffs, because tariffs slow the economies down. They never win. The threat of a tariff, if you really have the muscle, is an interesting and good play often to get the person that you're talking to, being the head of a country. Hey, we're going to hit you with this. Let's find a way to solve this issue. Otherwise, this is what's going to happen. When you're as big as America is, you can carry a stick. Remember Teddy Roosevelt, all right? If you haven't done your history, find out. And that's what's going on with Trump. I'm probably a fan of his. In the natural gas, now that the cold weather's upon us, today in the Chicago's 20s, it's going to be that way now for 3-4 days. In the East Coast, they're about to get hit. So your demand's here. If the market can't rally anymore, you often peak out. So be a little careful. I don't like being short nat gas or heating oil into the first set of cold weather in America. The first onslaught of winter. And right now, we are going into December, and like I said, we had our first snow. It lasted about 8-9 hours, and then it was all melted, but we have to pay attention. Now, if this year is much harsher than last year, maybe you don't drop as much in nat gas. However, Trump is one thing. He's about producing energy, and nat gas we can do an awful lot of right away. So just keep that in the back of your mind. When we look at all this, we talk this talk in our research. So Linn Associates has crews of people that are doing this. We have our own meteorologist, all right? Have had one, been with Linn for many years. On and off, I've been with Linn probably 40 years, believe it or not. And our relationships, I'm with the kids now from the family, and Gordy, he and I are still, we get up 4 or 5 in the morning, we work hard. But to make a long story short, I think their research is second to none in the futures markets. It's worth you taking a hard look at. It is free to all of our accounts to trade through us. Open up an account. This is worth it. Go to iraepstein.com to try it for free. Go to your free trial on the top left or move your cursor to the top here and give it a try. I'm Ira. You have yourself a great evening, and I will catch up with you all in the morning.